Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is March 30 and we're starting from euro-dollar pair with Jakub Novak as usual. First, let's have a look on 5-minute chart for analyzing yesterday's transactions. The pair tested 1.0840 at a time when MACD line was already far from zero, limiting the upside potential of the pair. Sometime later, there was another test, but this time it was at 1.0868, and the market signal was to sell. That caused a downward movement of around 30 pips. The completely empty macroeconomic calendar in the Eurozone yesterday pushed Euro up, but comments from Fed officials limited the upside potential. For today, markets will pay attention to data on Eurozone's consumer confidence and Germany's consumer price index. A rise in both indicators will certainly bring back demand for euro. Traders will also be interested in the ECB's economic update. For long positions, buy euro when the quote reaches 1.0850 and take profit at the price of 1.0886. Traders will see gains only when Germany publishes better than expected reports on inflation and consumer sentiment. However, when buying, make sure that the MACD line should be above zero or is starting to rise from it. Euro can also be bought at 1.0832. But the MACD line should be in the oversold area, as only by that will the market reverse to 1.0850 and 1.0886. For short positions, sell euro when the quote reaches 1.0832. and take profit at the price of 1.0801. Pressure will return if there is no bullish activity around the daily high and if the Eurozone releases weak economic data. However, when selling, the MACD line should be under zero or is starting to move down from it. Euro can also be sold at 1.0850, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0832 and 1.0801. The next stage of our review is the next major. GBP USD pair trading plan is presented by Sebastian Siliga. The GBP USD pair has made another higher high at the level of 1.2360 as the uptrend continues. The intraday technical support is seen at 1.2271. 50 MA and 1.2293. The intraday technical resistance is located at swing high. Any breakout below the technical support levels 1.2181, 1.2179 zone will accelerate the correction pace towards the lower levels like 100 MA located at 1.2036. The momentum is strong and positive on the H4 timeframe, so the short-term outlook on the H4 timeframe chart remains bullish. The market participants await for another trigger to extend the rally higher. We has achieved a second target on USD CAD. Petr Jakimovic is telling us how to stay in profit for this currency pair. USD CAD has been trading downside as we expected, and the price reached first objective at 1.3560. Anyway, the sellers are in control, and Petr sees potential for the further downside movement. Due to the breakout of the multi-day consolidation, Petr sees potential for the further downside movement towards lower references. Downside objectives are set at the price of 1.3520 and 1.3470. MACD oscillator is showing downside reading, which is another good sign for the further downside movement. Arif Makmur has a trading plan for cross pair EUR-CHF. Let's have a look. Although on the 4-hour chart, EUR-CHF cross currency pairs seems moving inside bullish channel. But on the condition of the stochastic oscillator indicator above the level 90, that means that is overbought and ready to go down. Give the signal that in the nearest future there will be correction below to test bullish fair value gap area. Around the level of 0.9915 and 0.9894. If this area works as support area level, which is strong enough, then EUR-CHF has the potential to appreciate it again to the 0.9996. As the first target, and the 1.0096 as the second target. On the other hand, if the bullish fair value gap area level is not strong enough to hold back the EUR-CHF downward correction, especially if the 0.9879 level is successfully broken down, then it's highly unlikely that a rally will occur on EUR-CHF. At the end of the roll, here's Lowry Bailey with USD GBY pair. Let's have a look. As Lowry expected, the USD GBY pair has chosen to rise to the nearest target of 134.15, the nearest embedded line of the global hybrid channel. Yesterday's price spurt was 197 pips. The pair continued to rally until the resistance levels, the highs of the March 22 and February 6. After a short break, Lowry expects the pair to reach the target. If, however, the Marlin oscillator does not manage to consolidate in positive territory, until then, a deep correction will follow from the level. If marlin strengthens in the positive area and the price consolidates above 134.15, may continue to rise to 138.15 target. On the 4-hour chart, the price has settled above the balance and the MACD indicator lines. The marlin oscillator slightly turns down, correcting before it rises further. The signal for growth is when the price settles above yesterday's high at 132.19. That's all for today. See you online soon. Good luck.